And it's the 10th of January, 2023. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. Let's kick off with the markets. Now, we see oil prices slipped today in early trade. See Brent futures there for March fell 43 cents to $79.22 a barrel, while U.S. WTI crude futures that fell 36 cents to $74.27 a barrel. We'll drill down on the drivers of that market later on the show. And back here, the Central Bank of Nigeria has asked all banks to stop dispensing the old naira notes with effect from Friday, January 13th. In a virtual press conference, the Director Currency Operation at the Apex Bank, Mr. Bello Mar, maintains that there would be no shift in the deadline for Nigerians to swap their old notes with the new ones. The Monetary Authority had set January the 31st as the deadline for the exchange of the old naira notes. Meanwhile, as the central bank begins its new policy on limiting over-the-counter cash withdrawals to 500,000 naira for individuals and 5 million naira, as well as third-party checks above 100,000 naira, bank customers have reacted to the latest directive by the CBN. While some of them who spoke to Channels Television commended the move as critical in achieving the financial market regulator's cashless policy, others criticized the move, saying it would have a negative impact on business transactions. Take a listen.
Because most of the business transactions are done with more physical cash. For example, now if you talk about the computer village in Lagos, Ikeja on the mainland, if we talk about Balogun markets in Lagos on the island, most of the transactions are more physical cash, and sometimes they get like large bulk goods, and then this has to count with lots of amounts of money. So it's not really helping, but I think it has its odds and even though. So this should be one odd part of the new policy, and I hope they look into it.
You go to the ATMs, and you're unable to get the new currency. So I'm trying to mix the two together now. So we're trying to change the currency note, and as well, you asked about the cashless policy. So I think it is good. I think people in the urban areas will find it a lot easier than people in the rural areas because of the absence of technology. You know what it took before we could pass the electoral bill into an act because they said there was network issues in those rural areas, and those problems still persist. So as the CBN moves to go to the cashless policy program, I think it will be nice that we also work pari passu with the infrastructure in those places to ensure that everybody is able to be on the same page. I support it. I think it is the next big thing because it's safer and it's modern. So, but then the infrastructure needs to be in place to support it before we begin to enforce, and that will be my own contribution to that.
And now let's head on to our first conversation. It's the commodities market update, and we see wheat edged higher, recouping losses from last session. Let's talk to Dr. Desola Sumoni now, analyst at Financial Derivatives Company. Join us via Zoom. Great to have you, and Happy New Year.
Happy New Year to you, to Lydia, and great to thank you for having me on the show.
Yeah, so is the 2022 wheat drama over and likely not to continue in 2023?
The short answer to that question is no, because there are a host of factors that drove the drama in, as they call it, in the wheat market, the volatility in the wheat market last year. And many of these factors still persist. One of them is the Russia-Ukraine war. And although there's the agreement to allow exports in the Black Sea area, that is a kind of a fragile equilibrium, because if there's an escalation in the conflict, then we'll see exports from both Ukraine and Russia are reduced, and that would also push wheat prices northwards. Other factors include weather-related issues. So the weather is still a big issue for commodities such as wheat, for example. Currently in the South American region, in I think Argentina or Brazil, we are seeing some drought which has affected wheat harvest in those areas. On the other side, in Australia, we're seeing bumper harvest because of good weather conditions, good rains, which has kind of offset the drought coming out of South America. So those two factors. And the third factor is this uncertain economic outlook, right? Because now the world is headed towards a recession, particularly because we are likely to see more interest rate hikes in developed countries, in developed economies going forward. And that has an impact on, first of all, the dollar, but also it's going to drag global economic activity. And that's also going to put a drag on demand for commodities. So all of these factors are likely to persist this year. Particularly, I think the most risk factor is the Ukraine-Russia war and potential escalation in that.
And obviously, we know we saw most commodities, hit new highs in 2022, but they've all, trended downwards, from those highs. Even the U.S. dollar, that's also, trended downward. Is it possible we're out of the woods?
Good question, Lali. This time last year, let me just give you a little bit of throwback. This time last year, when everyone was having their outlook for the year, right? No one knew that Russia was going to invade Ukraine, right? And that came and just all the bets were off the table. So, I mean, at the moment, it seems as if, first of all, the Ukraine-Russia the Ukraine-Russia war is not over yet. We are still seeing some. I mean, I think there was a kind of a cool down from Russia going to the Orthodox Christmas celebration, but there's still, the tensions are not over yet, and because of that, any escalation of those tensions would have like a ripple effect on the global market, including the commodities market, the stock market, all the markets. So I don't think we're out of the woods yet. Hopefully, I'm hoping that this war, which has persisted for about 11 months now, I think it will. We hope that it can be resolved quickly so that we can move on from that.
Yeah, we did get some good news from the FAO. The Global Food Price Index has continued to drop, to December. That's the 9th, consecutive monthly decline. That's good news.
Indeed, it is positive, Ladi. Like you mentioned, this index, which is was created by the UN Food and Agricultural Organization. It is a basket of around 5 food groups, which include cereals, dairy products, sugar, meats, and I think vegetable oils. And that has declined consistently for 9 months, which is good, particularly for food insecurity in many parts of the world. Like you mentioned, stronger dollar, in addition to record high food prices, meant that a significant portion of the world's population were food insecure. Right, but with the fact that it has been declining consistently, it is positive. It's one, to reduce the import bill for many of these food importing countries. 2, it can also help significant portion of the world population out of poverty, at least food poverty. However, it's important to note that despite the fact that this index has been declining consistently for the past 9 months, it is still at record highs, and potential escalation in Ukraine-Russia war would put potential escalation in the Ukraine-Russia war could change the trajectory. Hopefully, we do not see that.
And let's look at inflation. Obviously, we've got some forecasts for inflation data coming for December. So what do you see for Nigeria with that data?
So currently inflation in Nigeria, I think, is around 21%, larger 21 points, I think 3-something%. Again, what we need to look at is the drivers of the inflation, right? One of the key drivers is imported inflation, owing from, first of all, higher prices, higher global prices. But secondly is the exchange rate weakness. The exchange rates, we still have the exchange rate still a little bit volatile, but it's still relatively high. So I think with the fact that food prices, particularly wheat prices, are kind of coming down slowly with a relatively a stronger exchange rate, I think that's positive for inflation. But also, if you look at domestic production, look at how the rains that we had a couple of months ago, how the impact that had on the harvest. Currently, we are also seeing, for instance, Nigerian Cocoa Association of Nigeria forecast lower production of cocoa because of adverse weather conditions, excessive rains in particular. So I think all of these factors are still going to play into inflation numbers in Nigeria.
And obviously, we're still seeing, some volatility in the oil market, but prices, trending up today. What's driving sentiment there?
So this week, I think we've seen a little bit of volatility in the oil market. One, we saw over the weekend, China opened up its borders for the first time in 3 years. And that was positive because it was greeted with optimism in the market because, we are now expected to see more demand from China because China is the largest importer of oil in the world and the second largest user of oil. So with them opening up the economy, we are seeing, on one hand, we are seeing, more economic activity. We are seeing more travel. We are seeing more demand for oil. On the other hand, we are also seeing, more cases. If you look at what's happening in the health sector, a lot of the hospitals are overwhelmed with people sick with COVID. So anyway, the opening of China was greeted with optimism, and that, was positive for oil prices. However, yesterday, some US Fed officials struck a hawkish note, citing that, the benchmark interest rate would need to increase above 5%, up from the current 4.25 to 4.5%. And that, I think, spooked markets a bit, which, signaled that, this is going to drag, economic activity, and that's going to have a negative impact on oil demand. I think that is what is driving oil prices downward at this moment. Those two factors, it seems as if the fact that, we are going to see more hikes in interest rates or a higher than expected hike in interest rates for 2023, I think that was a huge drag on sentiment and that is why we are seeing oil prices trend downwards at this time.
And Desola, I want you to check your crystal ball now. It's 2023. What are you seeing for commodity prices, at the end of 2023? Do you think somehow, these prices might start going up again? Like gold has had some action, from 2022. Gold has rallied to about $1,800, per ounce. And it's been a silent move, I must say. So what are you seeing for 2023?
Let me start with where you stop. Gold, right? Gold is a safe haven asset, like, and with all the volatility that we saw in the commodities market last year in the global economy, it was not surprising that many investors put their money in gold. Just there was a risk off sentiment in the global economy, the global market, and that's why we saw a rally towards safe haven assets such as gold, and that's why you saw gold price rally upwards. People who put their money in gold last year, I think they'll make a killing at the moment. Now, talking about other commodities, Ladi, I think it is very, very difficult to forecast how it will play out because it's going to be dependent on a number of factors. For commodities, three main factors are going to drive the commodities market this year. One is escalation or de-escalation of the Ukraine-Russia war. That's one. Talking about the Ukraine-Russia war, even though we know that there's this agreement in the Black Sea about Ukraine exports, data shows that exports from Ukraine are still significantly lower than pre-war levels. So that is on one hand. Two would be weather conditions, whether adverse weather conditions or favorable weather conditions. Those two factors are going to affect commodities, the commodities market this year. And finally, the economic outlook. Right, last year, the last meeting from the Fed, the news or the gist of the conversation was that we're still going to see smaller increases in interest rates this year, right? And so markets forecast maybe 2.5% increases here and there, smaller pace of increases. But now, with what happened yesterday with two senior Fed officials, striking hawkish note, saying that we're likely to see interest rates end the year around in the range of 5% to 5.25%, which is higher than what the market has expected. So we think that higher interest rates in the US, particularly also in Bank in England and the ECB, would kind of drag what's the word now? We put a drag on economic activity globally. We may see the global economy go into a recession, and that would also strengthen the US dollar and weigh heavily on commodity prices. So these are the three factors that are going to drive the commodities market this year, Ladi.
And talking about a strong US dollar, obviously consensus now is there's a possibility the dollar has peaked against the basket of commodities, about other currencies, that's the DXY. So bringing it down home, the naira, obviously we're seeing flat movement that market. What are your expectations for the naira? Any possibility of strengthening?
Okay, let me talk about DXY. Like you mentioned, the DXY, I looked at the graph this morning. DXY had peaked, I think, Q3 last year, due to mainly, the rapid pace of increases in interest rates. And, there are still some analysts expect that we're still going to see trending upwards later this year. Well, I think that the naira would enjoy some respite this year for a host of reasons. But I think that I think that the naira is going to strengthen a little bit this year. All other things being equal, I think that the naira is going to strengthen a bit this year. At least we got to record lows last year. I don't think we're going to go lower than the rates we saw last year, where we saw the naira almost reaching, I think, 1,000 naira to the pound. I don't think we're going to see that this year. I think the worst is over. I think the naira is going to strengthen this year. How strong the naira is going to go would, depend on a host of factors. One already we are seeing what it will depend on level of interest rates globally. We are seeing higher interest rates globally, so that's going to affect the naira. Two, also depend on the kind of policies we're going to see in Nigeria. But note that we are going to have a change of administration very soon, so that might also play a role in the strengthening of the naira in the coming days. Yeah,
it'd be great to see how all of that plays out. But what are you seeing for domestic commodity prices?
So at the moment, Ladi, we are seeing a mixed basket. On one hand, we are seeing prices trend downwards. If you look at the price of Gari, it's down 77% to 13,000 naira. If you look at the price of tomatoes, the basket of tomatoes is also down around 12% to 22,000 naira. Mainly because some of these commodities are down mainly because of harvest season. Also, I think there's a kind of more supply related to demand. I think a lot of there was a stock up in anticipation of the Utah season, and that season is now over. So we have huge stock and huge supply relative to demand. So that's why we are seeing some prices trend downwards. On the other hand, we are still seeing some imports dependent or import elastic commodities are trend upwards. If you look at the price of flour, is up significantly to 34,000 naira, because we're also seeing this is tracking the higher prices, global prices of wheat, the higher prices of wheat in the global market. And if you look at the price of tomatoes, that's actually up significantly by 41% to 65,000. I think part of it could be weather conditions. Excessive rain affected the harvest of tomatoes, which affected the domestic supply. Another reason could be issues around insecurity. We are seeing a little bit of pockets of unrest here and there, which I think affects the supply of tomatoes from the north, from the middle belt or the north, coming down south. So these are the factors driving domestic commodities market at the moment, Ladi.
Yeah, quite a mixed bag, in that market. But thank you so much, Dr. Adesola Simoni, analyst, financial derivatives company. It was great having your perspective today. Thank you.
Thank you.
All right, we're talking commodities there, but now we'll take a break. When we come back, we're looking at Nigeria's construction industry. Get a review of 2022 and what to expect in 2023. That's our next conversation. To stay with us. Welcome back. Still watching Business Morning live on Channels Television. Now to our next conversation. According to the National Bureau of Statistics, the construction and real estate sectors contributed 20 trillion in the first 3 quarters of 2022, while construction services earned 12.9 trillion naira. Real estate contributed 7 trillion naira to the GDP. Quite impressive data compared, to 2021. Let's get more now from engineer Yoleke Ajiboye, CEO, Efficacy Construction. Join us right here in the studio. Great to have you. Happy New Year.
Same to you.
Quite an impressive data. We're getting to the GDP contribution from the construction and real estate for 2022. But it's quite interesting because that was a year we had, high inflation, and the central bankers, went crazy on raising rates globally, and yet we have that. How do you see it? What's your experience there?
Well, for me, I honestly think because there's been a large deficit over the years for infrastructure, for construction, so there's still a huge gap to be bridged. So there's still going to be housing deficits. We have over about 27 trillion of housing deficit or thereabout, or more than that. And then we still have a lot of infrastructure deficit. So going on, we still expect to have more contribution to the GDP from the real estate and construction sector. Despite the challenges of 2022, you also know that there's a lot of activities still going on. And these activities are basically pushed from the residential perspective of construction. Because, you have the residential, we have the commercial, and then you have the infrastructure. Infrastructure is mostly financed by the government. And then, but when you look at every man, every average family wants to own a property, so the drive for construction is still very much there. But as much as possible, even as we're adding to the GDP, it does not also translate to profitability. When it comes to the indices you just mentioned, from inflation to hiking prices, to recession, global recession, and all of that. So yes, the GDP is there, but it doesn't also translate to profitability.
So tell me about the challenges in your sector.
Well, in 2022, I think the challenges started from something around February, when diesel price went up. I never knew that diesel had so much impact on the construction that much, until when the price went up to about 200, we were shouting. Then April got to about 400, now it's about 800 naira per liter. Right from the construction site, your excavator uses a diesel. So an excavator that uses 100 liters per day averagely, before it was 20,000 naira to fuel that machine to work for a couple of hours. Now it's 100 times 80. So from 20,000 to 80,000. So you have a payloader, excavator, bulldozer on a construction site. So right on the site, your labor cost, operational cost has gone up. Now break it down to people that do sand. For every construction, you have the basic reinforcement components: sand, granite, cement, and the rest. So dredging sites, they use diesel to dredge, to operate their dredgers. So when diesel became 800 from 200, that means the price of sand went up. The trucks that transport the sand also use diesel. So you see how it impacts the pricing and everything. So prices of materials just went up. Prices of delivering housing units, delivering construction projects went over the roof. The same thing to quarry. The same thing to logistics. And sadly, we had a couple of power grid failure last year. So most of the manufacturing companies that were producing iron rods, steel rods, cables, also had to now start using alternative source of energy generator depending on diesel. So virtually every part of it was affected. And then I also learned somewhere that now ships now use diesel as against HFO, that is heavy fuels they use. So as a result, shipping costs also went up. So even importing some things is now a disadvantage. So all these ones even contributed more than the currency inflation challenges we're thinking, dollar going up. So those ones were not as worse as the ones we experienced.
So the real issue was energy. Basically for your sector. How did all of this play into pricing? Talking about the housing industry, how did this play into pricing of your deliveries?
Well, you see, Nigeria now over the years, there's the middle market is beginning to shrink seriously. So you want to play in the lower affordable range, or you're doing the big boys, the 5% of the 5% or 1% of the 1%.
Right.
So, but when you look at the middle income to the low income earners, housing, affordable housing model that you want to do, it's almost as if there's nothing affordable again. Because the houses before you want to deliver at 15 million, maybe an apartment, now you deliver it with nothing less than 25 million again. It's pushing prices up. You're also reducing the people that can access those prices. So at the same time, so as the price is going up, it's really not an advantage for players in the industry because your market segment is shrinking. The people that can afford what you are servicing, what you are providing is beginning to reduce gradually. And last year, I think we had a couple of people that took advantage of the exchange. So we had a couple of people abroad invest in the Nigerian real estate construction sector, which was a boost. But at the same time, there's an extent to it. Now, when there's a global economy, as IMF have said, that means over there too, they are going to be facing some challenges over there. That means it will further affect the construction. So we have to still think around the box and see how it works.
Definitely, the housing sector globally got hit in 2022, and
yes.
Obviously, talking about building materials. How much did the Russia-Ukraine war? How much did it play into that?
Okay, I will use my own experience, personal experience when it comes to importation. Apart from the challenge we had from energy, because the Ukraine crisis created a couple of recession across nations. America, things have gone expensive. Walmart, go to the UK, things have gone expensive. And so when we look at the housing market in Nigeria, we are also expecting some diaspora remittances to contribute to the housing industry through investment, through purchases. When they are not over there stable financially, that's going to impact us here. And then so when you also look, I was in Turkey to buy some materials recently. When I got to Turkey, they were struggling between their dollars and their lira with the inflation they were battling. So most of them are saying, we don't want to collect dollars, we want to collect lira. So I make a purchase now. In 2 days' time, they tell me the price has changed because dollar has changed again. So automatically also is affecting the housing industry and the construction industry because there's actually nothing called fixed contract again. Because when you look at it, if you are telling me to have a fixed contract, you're actually saying that this is what I will pay. But the economy globally is extremely very volatile at the moment. So the Ukraine crisis and the Russia crisis has created pockets of issues across different countries, considering that we have our own challenges as Nigerians or as a country. So that's the way I think it is looking now.
All right, looking at 2023 now, what are you seeing for residential housing demand in 2023?
Well, I think we still have a lot of gap to be closed up. There's still a huge amount of demand. Yeah, despite the fact that some people are traveling abroad, leaving the country, but those people already have something to even be able to afford a ticket or something to go and start up. So, but when you look at it, there's still a huge demand. But I think the government needs to do more. One of the things I think would really drive the housing deficit to reduce it is when governments start investing intentionally into infrastructure development. Then people can live in different locations. You don't have to cluster and live in one particular spot that the prices will be too expensive. That way, cost of land is not the same thing everywhere. There are some places that the land cost is very cheap. So when there's infrastructure to those places and people can travel 1 hour to work, people would rather go and live there and then enjoy their serene lifestyle than living in clustered areas that you're even paying through your nose to even be able to afford that residence. So I think the game changer is still going to be government intentionally investing in infrastructure to open up new cities, new neighborhoods, new towns for people to go and start living in.
Because I see most of those real estate companies developing, housing estates, farther, out. How's the demand for that? Outskirts, yes.
I would say that, some of the things that is driving those outskirts development is pricing actually. So everybody wants to live in Ikeja, GRA, Ikoyi, Lekki, Phase 1. When you look at your pocket, my pocket cannot afford it. So sometimes I have to go as far as Agbado, Ipechuleki, go towards Festag, Maitu, Okoko, just for you to be able to stay where your pocket can fit in. But it's not a bad thing to live in those areas if they are express like the Blue Line Lagos is trying to do now. If there are good transportation system networks. So when you go abroad in the UK, these places, these people, they walk many distances away from their house. So, but as much as possible, there's a good connecting system for transport grid. It's going to make it very easy. So when you look at those axes where people are beginning to invest in Ipechuleki, for instance, a lot of people are putting in developments there. Projects are coming in there. People are moving in there. I think for a couple of years now, Ipechuleki has been the fastest corridor in Africa. compared to the investment Lagos State government has put in there, the federal government, estate development, private sector. So the real estate and the construction development in Nigeria is actually private driven. Because the private sector that is doing internal roads in those areas, not that government is doing that. Government is focusing on the highways. So as they are doing those things, they're actually opening up more construction, more activities, more space for development.
And obviously, you know, looking at it from a global scale now, we know obviously all the central bankers, you know, they've raised rates in 2022, and there's still projection that rates are still going to go up, you know, in 2023. And even, you know, back here, you know, as long as inflation is high, we're seeing the central bank here and the MPC looking at raising rates, you know, even more. So when you look at it now, how have the banks, you know, been reacting, you know, to players in your industry in 2022? And what are you expecting for 2023? Talking about cost of credit.
Cost of credit is presently very high. So, and unfortunately, you can't really blame them because they are into business. But when we look at it as an organization or as a group of people practicing in this sector, one of the things we really need government to do is to be able to ensure that we encourage or provide opportunities for people to get affordable loans, affordable housing. So because when you look at this cost now, okay, there's something that Family Home Funds is doing that they can give people for 10%, something like that, to own a house, federal mortgage, but they are not easily accessible. So if I go to the bank now and I see a house I want to buy, the house is 40 million naira, and I go to the bank and the bank is saying, we will finance this house, but it's 25% for 2 years. So 25% already is high. So, and then between now and being able to even get that done, there's a lot of bottleneck along the line. So the interest rate now is actually making ready-made houses difficult to sell. So completed houses now, we have a couple that are empty. It's not as if there's no need for them, but people don't have that ready-made cash to pay full for it. And when they go to the bank, the interest rates are high. There are a couple of bottlenecks to be able to access those things. So as much as possible, the interest rate, bringing it down, and then the CBN working on that intentionally would really help. And that's why you see a lot of off-plan in the market now. People are doing off-plan developments. We also do that. So when you do off-plan development, it gives you the leverage of paying in installments gradually. So actually the developers or the people doing the construction are now serving as the credit giver. We are now the one indirectly borrowing you that facility to do it. And when you do that, most times you don't actually pay up to what the bank is going to charge you. So as much as possible, those are things that the industry is thinking around the box to make it happen.
Right. And it's obviously, it says an election year.
It's an election year.
Is going to come in. What would you like to see?
Wow, there are a lot of speculation, but I will stay on the side of the positivity. Yeah. I like to be.
What would you like to see from the new government?
It's strange that none of them is talking about affordable housing. None of them is talking about housing, really. I've seen a lot of their manifestos. Nobody's talking about, we are going to create new towns, we are going to create houses, we are going to fund. No, I've not seen anybody talk about, I may be wrong, but so far with my little listening to someone, nobody's talking about housing. And housing is a major part of United Nations Resolution for Humanity, shelter. So if you don't have enough shelter, it's also an indication of economic growth. So they need to look at it intentionally to say, last year if they've contributed if they've set their mark 470 billion or thereabouts to encourage housing, they say let us do more. What did that 470 billion do? Were they able to open new towns? So the new government should actually look into the area of land use, land distribution, land affordability, because the land controls a larger part of the development.
Fantastic. Well, it'll be interesting to see how it all plays out.
Yeah.
Thank you so much, Dr. Oyeleke Ajiboye, CEO of Efficacy Construction. It was great having your perspective. Thank you again.
Yeah.
All right, so we've been talking construction industry and the real estate sector, but now we're going to head on to the markets. We had a nice positive close yesterday. Good way to start the week. And Anete has
morning,
all the details. Good morning.
Yeah. I guess my crystal ball is starting the year with a right prediction.
Yeah, you did say it would be positive, and it was.
And of course, I expect it to still continue. Yes, of course.
So the crystal ball is still talking.
Yes, it's still glazing the crystal ball. It is, well, I'm giving my own outlook. The rest are going to give their own outlook. Later this month, we will be expecting...
the month of outlooks.
Yeah, the month of outlooks across board, from the IMF, the World Bank, the NGX, other economic analysis. Even the NGX later this month they're expected to release their outlook, which will guide investors for their investment on the equities market.
All right.
And don't forget, Nigeria's stock market was the 4th best performing for 2022.
Fantastic.
Right, that's it. So now, without being said, take a look at the board there. Green for the second trading week of January. Today is the 10th day. So, but on the 9th, what we had is nearly 1% gain on the market, which is more than 250 billion naira in just one single day. That was largely driven by telecom giant, one of the two telecom giants, which is Airtel Africa. So that's why the market made that very, almost massive gain for that day. Now, let's take a look at the sectoral performance. The lone gainer there, it was a mixed board there, as you can see. Two were flat. One was the consumer goods was the lone gainer, while we had profit-taking take its toll on the banking sector as well as the insurance counter of the market. Let's flip over to the activity chart. Activity chart is also a kind of a mixed picture where we had, for total volume of stocks traded, it was up by 17.1% in contrast to what we had on Friday. And then for the value was down by about 60.96, nearly 70%. What we had was just 2.9 billion staked on the value of shares traded for Monday. And then the total number of deals carried out, it was also up. It was up by about 6.82%. But don't forget that Airtel was the most traded stock by value, while we had Sterling Bank, which topped the activity charts with a 37.16% contribution, which is at about 85.18 million units of shares. Now, for that market, we also had Thomas Wyatt being the top gainer, while UBN was the top loser for the day. Now, let's flip over to another segment of the market, which is the fixed income market. For the Treasury, the bonds market, it started the week with bearish sentiment. At the same time, the average yield there is expanded by 4 basis points to about 12.5%. But now, take a look at the FMDQ Securities Markets Trades Board. What we have there, the 23rd of February 2028 paper, it had the highest attention there. We had 4 deals. And that deal was worth about 4 billion. Now, cumulative, this is what we had in terms of the total value there, 7.32 billion naira. Now, for the total number of deals carried out there, it was 10. Let's move over to another segment of the market, the Treasury bills market. The Treasury bills market, it was bullish, and as the average yield there, it contracted by 36 basis points. And of course, at the same time, we also saw participant demand for the 45 dates to maturity bill, but then it closed, the market's yield. The yields closed flat at the mid and long segments of that market. Now let's move over to the OMO market. For the OMO market, average yield there, it was flat by 3.4%. But what you see on the board there, the highest number of attention was on the 12th of December later this year. And then the total number of deals carried out there was 14. Now let's move over to the last market. For the central bank special bills, this is what we had, 8 number of deals. Now to tell us more about this market, let's talk to Ramat Baba, who is Chief Dealer Fixed Income at FBN Quest Merchant Bank. Thank you for joining us. Okay, we don't have Ramat Baba. Okay, so for that market, we will be looking out for the Treasury, the first PMA, primary market auction at the fixed income markets tomorrow, which will be carried out by the Central Bank of Nigeria. Now let's move over to another segment of the market. We have the unlisted securities market. For that market, it declined by about 0.89%, nearly 1%. And that's in contrast to what we had previously. We had 0.41% loss initially. Now for the market, the total volume there, it increased by more than 1,500%. What you see on the board there, 2.26 million units of securities traded at a value of 13.05 million naira. The total number of deals carried out there, 24, and stocks traded about 4. And then for the gainers that we had there, we had just two losers which had an impact on the market. UBN Properties Company, which was also the most traded securities on the NSD OTC market, while Friesland Campina Wamco PLC was the second decliner, which is why that market was in the red territory for Monday. So, Ladi, for the unlisted securities market, it's starting off not too good. year to date, it's not too much impressive, but it can always turn.
It can always turn. It's still early days, in 2020. We're trying to see how those markets play out. Thank you so much, Niete, they're giving us all the details from the markets. All right, thank you so much. Let's move on to the UK now. We have Juliana standing by there. Great to have you, Juliana. So we've got some data out in the UK, and this one is from the British Retail Consortium. They watch, a lot of consumer spending there, and they see that, spending in match up to inflation. What are you hearing about that? That's in December.
That's absolutely right. Good morning, Laddie. We have had data from the British Retail Consortium this morning, which has been compiled alongside KPMG. And for the 9th consecutive month in a row, retail sales have fallen. And this is not great news for the retail sector, who have been battered over the past couple of years. I think anybody that's working in retail really puts all of their hope and glory into December, because that's the festive season. That's when people are going to spend more. And they did spend more year on year, 6.9%, I think the data came in at. But if you look at inflation currently running at double digit, it just doesn't weigh up. And we did hear yesterday, I discussed this with you on Business Morning 24 hours ago, that the Resolution Foundation think tank are already predicting that the cost of living crisis that we've been going through over the past 12 to 18 months is likely to get worse in the coming months. So unfortunately for beleaguered retailers, 2023 is looking likely to be a lot worse than the previous year.
Yeah, obviously, with all the bleak outlooks we're getting for 2023 at this point, but inflation is still obviously with us. And the Bank of England chief economist is saying inflation may prove to be more persistent in the UK than other countries. So I'm guessing more rate hikes ahead.
Potentially, and we know what happens. You hike the rates, millions of mortgage owners are pushed to the brink. Already they are defaulting because interest rates are at a record high of 3%. Just a year ago, it was about 0.1%. So it has been a significant push. But yes, we did hear from Hugh Peel, the chief economist, well, the deputy chief economist at the Bank of England. He's been speaking in New York. He was talking about inflation because, of course, that's a huge talking point at the moment. And he said Britain is kind of an outlier. It is very unique compared to the other G7 nations because we are struggling with the labour market at the moment. The labour market is extremely tight. There are less workers. It's very difficult to find people that can do high-skilled jobs. And if you know you are one of however many people that can do a role, you're going to ask for more money. And that, of course, pushes up inflation because you've got more money to spend and demand increases. And that is going to be a huge issue for Rishi Sunak. Already we know that he is in discussion with union bosses because nurses, teachers, private sector workers, rail workers, they are all asking for more money. Potentially more money will come, but of course we know from the Prime Minister's New Year address last week that he wants to bring it down, and you can't provide more money to workers if you want to push it down. So that was kind of the gist of what Hugh Peel was saying in New York overnight, and I suppose we'll have more reactions from that when House of Commons sits for PMQs tomorrow.
Right, and obviously we have the US CPI data for December also coming out this week. All right, thank you so much, Juliana. See you at 1:30. Thank you.
See you then. Thank you.
All right, now let's move on to other markets that we see. Bitcoin still remained in positive zone above the 16,800 level. It's increased, extended some increase after a clear close above the $17,000 level. And we see the sentiment in the market there's 26 points better than yesterday. Yesterday we had extreme fear, but now we just have fear in the market. An improvement was about 25 points yesterday. So this definitely an improvement, showing that investors are getting more skin into the market at this point. We see market cap there, $849 billion, trying to get that 850 level, up 0.13%. We see volume traded this morning, big volume, 27.45%. up, and Bitcoin dominance 39.02%. Looks like it wants to inch below that 39% level. Let's look at the price of Bitcoin, 17,210, did stay above the 17,000 level, and it looks like it's getting more upward correction at this point, 0.09%. And we see that also we see investors, the crypto market also looking towards that US CPI data for December. maybe if it comes out, better than expected, we might see some a rally in this market and some of those U.S. equities markets there. Volume traded at $16.35 billion. We look at Ethereum there, that's $1,300. Did manage to stay above the $1,200 level for most part of 2022, and now we see the 1,300 up 1.25%. And obviously the metaverse that was trending, in 2022. Let's talk to Akash Growell, founder, MetaWorks, joining me via Zoom. Great to have you.
Same here, Larry. Thank you for having me here. Good morning.
Good morning. Yes, I was saying about metaverse in 2022. We're hearing a lot about the metaverse. There was hype, and we saw, metaverse projects actually, do well at some point, last year, and also in 2021. And interestingly, some companies leveraged, the metaverse, for their business in 2022. How did that work out for them?
Well, that was pretty awesome, actually, Larry. And you know what? Actually, when you talk about hype, metaverse actually is one of the most hyped technology concepts right now. And what we're seeing is, if you look at it from the outside, it's all the AR, the VR, the immersive experiences that we see being created by games and the brands. I mean, that sometimes leads to, a lot of unrealistic expectations. And that's what we actually saw in 2022. But actually, if you look at the term metaverse itself, and I'll just get to the brands that you talked about, that itself was coined way back in 1991. So it's been 30 years since, and it is only now that we're seeing metaverse come into existence in one form or the other. So first, let's try and understand a little bit of what metaverse is. So we can look at it as an interoperable 3D virtual world, which actually enables work, it enables play, social interactions, and also m-commerce, or as in metaverse-based commerce. And actually, this is where it becomes very interesting for brands and organizations actually to come in and see as to, what is it that they can do to stay relevant for the customers, and what experiences that they can build within the metaverse itself. So talking of 2022 in terms of what brands did, if we go back to March of 2022, we had the first ever fashion week being held in the metaverse. And almost 60 top brands from the fashion business actually participated in that. The event was attended by over 100,000 visitors during the 4-day event. Now, other than having a whole lot of fashion shows within the metaverse, where you could, where the brands actually put on digital clothing on avatars who would walk down virtual ramps, visitors actually could purchase physical products in the metaverse via NFTs and have them delivered to them in real life. So this is where actually it opens up a whole new genre for brands to interact and engage with customers. So that is what we are seeing. If you look at, I'll give you a few more examples. So if you look at brands like Gucci, they have set up an entire Gucci town in another metaverse called Roblox. And this is where, since they're set up in 2021, so far they have had close to about 38 or 39 million visits. Now, similarly, Nike set up Nike Land in, I think, late of 2021 or early 2022, and they have had about 29 million visits to their Nike Land itself. Which actually real-life existence or which real-life initiative could actually help a brand expose or help a brand engage with so many customers at one point in time. So that really is the opportunity that brands are leveraging. And what we are seeing is brands across sectors, all the top brands across sectors, whether you take automotive, you take financial sector, you take consumer goods, they are all now engaging and experimenting in the metaverse. So, and if you look at it from the investment perspective, so McKinsey came out with a report sometime in 2021, where they reported that about $120 billion had already been invested by the first half of 2022. And that was almost about double of the investments in 2021. So that is a level of engagement that we're seeing right now.
Quite interesting.
And it's happening across. It's super exciting.
Quite interesting, Akash. But obviously, do you see quite an impressive brands we saw taking advantage of that space in 2022? But what are you seeing for 2023? Do you see more brands flocking to the metaverse, and do you see the hype continuing?
Oh, absolutely. So I think, so one thing we have to notice is that the hype, while it existed, it is also, waning down a little bit. And what we are seeing is underlying this is the real use cases that are rising to the top. And that is what we have seen when brands like Nike or Gucci or Louis Vuitton or Burberry have gone in and created some real life examples where actually they've been able to engage with their customers and also generate revenues. So I think that trend is definitely going to continue. And if you look at it, metaverse again, so we have the Web2 natives. So for them, Web3 is a natural progression or a natural extension. In addition to this, what we will also see is as more and more experiences get created within the metaverse itself by brands, by gaming companies, it will attract new customers absolutely in there. At the same time, because of technological advances which are happening, AR and VR, the immersive experiences themselves will begin to improve. So it actually becomes a positive cycle where as more and more customers come in, more and more brands will continue to get attracted towards this. And if you look actually beyond the next year itself, and we look at some of the estimates which have been put forward by some of the leading companies, so McKinsey estimates the metaverse opportunity itself to be in the range of about $5 trillion by 2030. Citi estimates this to be anywhere between $8 trillion to $13 trillion by about 2030. Yeah, that's right.
All right.
So, just for context, Larry, I'll just take one point here that e-commerce today is about $4 trillion, and it's taken us about 20 or maybe about 20 years, about just over 2 decades to get there. And this is the opportunity that we're looking at metaverse in the next about 8 to 9 years.
All right, we'll keep watching and see how 2023 plays out for the metaverse industry. Obviously, there's so many projects, playing in that space, in the crypto market. Most of them have tokens, but they've not been able to really, leverage on the technology from what we've seen. Most of those are projects in the metaverse. But do you see them, stepping up? We see most of them have tokens, and they've been battered by the markets. And obviously, the bear market seems to, wash away all the projects that are not ready.
No, absolutely. You pick up a brilliant point, Larry, actually. So we have seen a lot of hype. We have also seen a lot of projects probably that should have not even been there in the first place, who were actually able to ride that hype. So those are the ones who are crashing right now. But then the overall sentiment has also settling down. But what will happen is tokenization itself becomes very, very important. And that is also the currency of the metaverse. So I'm not just talking about cryptocurrencies, which becomes a mode of payment. There are also CBDCs also which get integrated. And then on the other side, we have tokenization of assets in terms of tokenization of real life products. So if Tommy Hilfiger is selling a jacket actually within the metaverse, it all starts off with a tokenized version of that. So we will see those kind of use cases actually come to fore, and mostly being led by brands who have real life use cases. And that is where the value will continue to keep getting generated for the brands and for the customers.
All right, thank you so much, Akash Agrawal, founder MetaWorks. It's great having your perspective today. Thank you so much.
Same here. Thank you so much, Larry. It was great talking to you.
Thank you. All right, so that's the show today. Thank you so much for watching. Don't forget to join us at 1:30 p.m. on Business and Corporate for more updates and developments in the world of business. John Mekwa will be handling that. And don't forget, you can watch this again on our YouTube page. Just flip over to YouTube, search for Channels Television. Then you can see all our other productions when you click on the videos. Thank you so much for watching. I'm Ladi Williams. Bye for now.